And I'd like to get going, and I'm going to introduce Justin Lamontagne. He's a partner at NIA, the Dunham Group. He's a veteran of this stage. Joined us once again for the Southern Maine Industrial Forecast. We have his Twitter handle on the screen and his bios in your conference materials. And as we do for all our speakers, Justin, please kick off the conference, and welcome Justin Lamontagne.
Well, I know we're all sad not to hear Paul's jokes, but I am going to give you guys the industrial market forecast, and I'm just so pleased and happy to be here once again and to be asked back. I'm going to start just by a quick thanks to my team at the Dunham Group, Marina Termel and Lindsay Junkins, who really put together the data points that Paul's talking about. We also, once again, produced the industrial market survey, which is downstairs. Marina makes it look pretty, and I couldn't do this without them. So I'll tell you a little bit about what I'm going to do here. And I changed the outline a little bit from years past. And I'm going to start by presenting the data, the actual numbers from the industrial market survey, because they're so striking. They really explain everything that we experienced in the last 12 months. For those that don't know, the industrial market survey is a comprehensive catalog. I've been tracking this market for 7 years now, vacancy rates, lease rates, and whatnot. So I'm going to share the numbers. Then I will get into 2017, what the trends and anecdotes, kind of some of our bigger deals looked like. And then I will, of course, finish with the forecast and make some predictions. Here are the results of this year's survey. We're up to a market size of 18.6 million square feet, 566 buildings in Greater Portland, including Biddeford and Saco. And you do the math on that direct vacancy, and that is not a typo. 1.25% is our current vacancy rate as of December 15th, so only 30 days ago. I'm going to talk a little bit about cap rates later. That's what that top line is. For now, this chart, I want you to focus on that green line. That is vacancy rates by year since 2011. When what was a healthy 8% tenant landlord friendly market has plummeted year after year down to what again today what we're seeing today at 1.25%. Accordingly, lease prices have increased, but not not nearly as dramatically as vacancy rates have dropped. For years, it was a steady incline, but this past 12 months, we for the first time saw a dramatic spike, $1 a square foot over last year's average price. So we're now averaging an asking price of around $675 a square foot, triple net, and that's after 30, 40 years of being in the 4s and 5s. That dramatic jump I'm going to talk about later is very important for a very important reason. This chart shows vacancy rates by town, and really the story here is that this is not a Portland thing. This is very much a greater Portland thing, and it's becoming a Cumberland County thing, and it's bleeding into northern parts of York County and certainly the secondary markets as well. Average sale prices per year, also a striking chart. Again, 2011, we were typically selling buildings in the $40 per square foot range. Year after year, up, 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 up. Today's typical average sale is in the $60 to $65 a square foot range. We're even seeing premium pricing, peak pricing of $80, and depending on the size of the building, $100, $120 per square foot. So those are the numbers, and I wanted to start there, and I appreciate your time considering that, because again, it explains everything that happened in 2017. What does it all mean? It means we're in situation critical. I've been describing this market for years and using different descriptors like vibrant, and then I turned it into tightening, and then inhibiting. And this year I went on LinkedIn and kind of jokingly said, what's worse than inhibiting? Because that's really what we're at. And I got words like stifling, restrictive, preclusive, hogtied. That was a good one. Mike Carey at Transon gave me that one. And call it whatever you want. This is a landlord's market. It's clear as day. And as a result, they can be very selective in choosing what tenants they're going to accept. And not only has that driven up costs, but those limited opportunities for, ironically, the higher impact tenants that got us to this point, think about industries like craft brewing, medical marijuana, fitness facilities, cool food and beverage production facilities. Those are the ones that are really hampered the most in this market. When inventory did become available, as you'd imagine, demand was just frothy. It was through the roof. We had multiple offers. We had off-market deals. We had early-to-market deals. And what that resulted in was a lot of frustrated end users and business owners who lost out on opportunities. And that's kind of the message that I really want to drive home today from this stage. This is no longer just a funny anomaly or story to tell. It's not just beer and weed taking all this space. This is an economic development and growth issue. It's really stifling. And our in-state growth, and really importantly, our out-of-state recruitment growth is now hampered by this lack of bricks and mortar. It's not just high energy costs and taxes and lack of labor. We don't have any space to put these new companies in. So the number one question I always get is, where's the new construction then? The market conditions are perfect, right? Yeah, kind of, but only to an extent. We still have some challenges. Lease prices until 2017 were not even close to supporting the cost of what it would take to build a new building. That jump that I mentioned, though, in 2017, that's indicative that we're getting closer, and it's a really positive thing, and I do think new construction, we had a number of examples in 2017, it's much more poised and in a better position to continue into 2018. Financing remains a challenge. There's a lot of bankers here. Tell the banker at your table, loosen up. Speculative financing is okay. If you build it, they will come, I promise you. That actually gets to timing. Timing is a problem because most of our local clients plan 3, 4, 5 months out. And if you're going to build on a piece of dirt, that's a 12-month process. It can be, depending on what town. Once you negotiate a lease, get the permits and approvals, and ultimately build the thing. And that's challenging for a lot of our local companies to plan that far in advance. The dirt itself is limited. We kind of have a dearth of industrially zoned land, certainly in Portland and in greater Portland. There are some opportunities in Biddeford and Saco and in some of the tertiary markets, but right now there's just not a lot of land to build on. And ultimately, oh geez, what is that? Thank you, whoever. But ultimately, really, the number one barrier is the cost of construction. It's upwards of $100 to $120 a foot just for a simple metal style building when you factor in the land cost, the hard cost, and the soft costs. So it's just an expensive endeavor. That all said, there's some success stories. This is a list of 8 new construction projects, not huge, but it's what I could figure out and what was reported to me. I'm not going to go into detail here. Let me sum it up. It's about 200,000 square feet in 17 of new inventory, which is great, but in a market of 18.6 million, it's really a drop in the bucket. Adding to that, only 30,000 square feet of these buildings are available, so the net absorption really wasn't very high. So how did we get deals done? I'm whining up here quite a bit, and this is a tough and tight market. How did we get deals done? Sales demand was through the roof. When we did get sale listings, it was owner users competing with investors locally. And that said, our volume of deals, the number of transactions we had was far down. And I think I've talked to other brokerage firms, and they echoed the same thing. And as you can imagine, it's solely because everything is full and we have very few motivated sellers. Investment property, when we did have cash flowing property, it was in very high demand, and that drove cap rates down a little bit again. We're now typically in the 8 or 9% range with peak pricing in the 7.5% cap rate range for a real high quality and well-located building. This phenomenon I talked about last year, the speculative buying as opposed to purchasing. An investor sees a quality empty building in a good location and is confident that we can rent it out, they'll buy it empty. That's something we never saw in 2011, 12, or 13, but very much becoming more of a norm in 2017 into 18. Lease renewals, of course, tenants would go out to the market, see very little or see very expensive space, and recognize that their best option is certainly to stay put. There were a number of significant renewal options in 2017. Whoops. And lastly, I'll touch on medical marijuana. That industry, which drove so much activity in years past, really slowed down in 2017. As you can imagine, and you've read about it, there are just too many unknowns, a real lack of legislative direction. So actually, we had a lot of interest, a lot of inquiries, but inking deals and closing deals was very challenging in 2017. I think that stands reason to change. I'll get more into that in my forecast. Well, here are some of the largest lease deals of the year in sales. 30 Saunders Way, that's one of those new construction projects. J.B. Brown built a 60,000-foot building, half of which has been leased to Maine Beer Company. Derek Miller, the Bolus Company, represented them. Drew Sigfridson is marketing the balance of that building. 155 Rummery Road, I want to give a lot of kudos to the folks involved in this deal. It's one of the best speculative projects. Dave McLeese purchased that building with Roxanne Cole's help, added some value to the existing 50,000 square feet, landed Mattress Firm, represented by Charles Day, and then added an additional 24,000 square feet, and they were able to secure Weber Fuel. Derek actually also represented them. So just a great success story. Noel Graydon is here. He deserves some credit, the banker from Norway Savings. Again, if you build it, they will come. 97 Shaker Road, not the biggest deal of the year, but indicative of how fast things moved. I listed this building in 12,000 square feet in gray, made a number of phone calls. 2 hours later, I had a showing, and the next day, we had it under agreement. So it was very, very fast moving. It was just an ideal fit for Agron Appliance took that. 47 Spring Hill, this is a beautiful building at 17,000 square feet in Saco. Pete Harrington represented Cirrus Systems. Cirrus has gotten a lot of press. New to Maine, growing, doing really cool things, and they were able to secure a nice large building in Saco. 1 Runway Road and 117 Pleasant Hill, large deals, 34,000 square feet, 20,000 feet. Tom Dunham and Greg Hastings in my office did those. Some sales, again, not as many sales this year, but here was a big one, 3 Business Parkway in Brunswick. This is the former Times Record building, just under $4 million. Dan Greenstein, Greg and Tom did that deal. 14 Willie Road, this is an interesting one. This was sold to a tenant who had an existing purchase option price, and he exercised that right this year, and looking at the numbers, I don't think the seller was thrilled. It was probably under market based on market conditions. 30 Thomas Drive in Westbrook, beautiful building and a great location, indicative of increasing investor risk appetite. There was some shorter term leases here, there was some vacancies, but he still bought it for $100 a foot. I'm actually doing the leasing there now, we're under contract, so with some tenants, so it will be full, but that's the kind of sale that probably wouldn't have happened in 2011 and 12. 235 Presumscott Street, another deal where an investor master leased it 3 or 4 years ago with a fixed purchase price option, and he exercised it in 2017. $1.5 million for 42,000 feet. That seems like a screaming deal in this environment. 412 and 414 Hill Street. These are 2 different buildings owned by 2 different parties, sold to the same investor. I included this just because it shows that Biddeford, which for years was a tougher sell, also saw great interest and activity this year, and their vacancies are below 3%. TC Haffenreffer in my office represented the buyer there, and Greg Hastings represented the seller. Lastly, 65 Milliken, this is a former recycling facility. Drew Sivritson sold this for $1.6 million. On a per square foot basis, looks like a good deal. It was a rough building, so it's probably a fair price. Nationally, I'll fly through this. Similar story, but with added inventory. So the pressure is far less. They've added new construction consistently throughout the country, whereby Maine has not. E-commerce is leading the way. It's Amazon and everybody else. As similar to here, the investment market is very, very hot nationally. Cap rates have dropped considerably, and as a result, we're seeing regional and national investors show a lot of interest in Maine as our returns are still somewhat higher. I'm flying. I'm trying to go as fast as I can, Paul. I swear. I want to get into my forecast. Here's some significant vacancies. There are still some spaces available, but 2 of the largest ones here are technically not even available until 2019. Again, I won't go into detail, but I do think all of these spaces will. I know they're all getting a lot of activity. It stands to reason they'll be leased in 2018. And now my predictions. I wanted to change this up a little bit. I've done a lot of speaking engagements, and I always enjoy the Q&A, and I understand we can't do that just based on this forum here. So I actually sent an email to a lot of you on my network list, and I asked, what do you want to know? What are your questions? And I got a lot of good feedback, a lot of good questions, and the most common one was in regards to marijuana and recreational marijuana. What happens when, if and when it does, become legal? And as I mentioned, we slowed down transactionally in 17, but clearly that'll change when we get some real direction and formal laws dictating and how and where. However, I don't think the greater Portland market is going to be quite as impacted just given our lack of real estate. We don't have any space for these guys to go. So the real great opportunity, in my opinion, for those communities that do embrace this industry is going to be in the rural markets and in the secondary markets where they still have big mills and shuttered factories and a need for new jobs and new commerce. So if people want to have that, take advantage of this industry, that's where it's going to happen. It'll be in the northern parts of the state. What industries? What's new? What's coming? What's the next craft brewing? like all industrial brokers, I'm very interested in e-commerce. I think that that's just going to drive this sector for the next, generation, really. There's a funny rumor that Amazon, their purchase of Whole Foods was not just about the business, it was about the real estate and the bricks and mortar. Those are centrally located distribution centers, and so there could be a great opportunity there. That gets to another fascinating trend I think is going to happen in Maine, and that's the repositioning and reuse of these big box retail stores. Think about your Sears and your Kmarts. They're really just warehouses, and they're just in shopping districts. So as people shop differently, those owners are going to have to get creative and perhaps reposition those buildings. We've seen an example locally of this already. Clark's Pond lost 3 big box retailers and converted it to a church and a couple other unconventional uses. So I expect that to continue. Some folks ask me, where would I put my money? Put my money where my mouth is. Where would I invest, short and long term? Short term, the asset that we got the most activity on in 2017 is any property under, say, 10,000 square feet. These owner-user buildings that are very flexible, that can go to a lot of different uses. We had a lot of interest, and it drove prices up. But if you're able to secure something like that long term, that's a winner. And then long term, it's got to be land, right? Land is a finite resource. Demand isn't going anywhere. Again, I'll speak to some of the municipal leaders. Look at your maps. Think about where you might have opportunities to rezone and add industrial zoning in your municipalities. And I just know that demand will be there, and it could drive great business to your towns. A number of people asked, what's the next hot location? That's exciting. Location, right? In Portland proper, I think of 2 spaces. Libbytown, St. John Street, Congress Street area where Thompson's Point is. That neighborhood is really poised to blow up. There's a number of developments already happening there. And there are some industrial components to those spaces. The other one I talked about earlier, Persumscott Street. That street I gave a lot of stuff to over the years. It was not an easy lease or an easy sale there, but the new investment and added development interest along that street, people are getting priced out of Marginal Way and East Bayside, and a number of these businesses are ending up on Persumscott Street. Just last week, Tom Dunham and I sold the Pier 1 Imports building at 145 Persumscott. Eldridge Lumber will be redeveloping that. So a lot of interesting, fun things happening along that stretch. And then pricing, what's going to happen? I don't see any reason to think that sale prices won't continue to increase. Demand is just too high. Multiple offers are still there. And what's interesting is finally in 2017, appraisers got comfortable, I think, with market conditions having more of an impact on value than, say, market history, comps and whatnot, because we're on an upward trajectory. So a lot of these sales we're appraising, which is great to see. Leasing, I do think, will tick down a little bit, or maybe plateau. And there's one main reason, M-A-I-N and M-A-I-N-E reason. Our local companies at some point can't afford the lease prices that we're getting to. So on a number of occasions, I've had tenant clients just draw the line, despite the landlord having all the leverage, and say, this is it, this is what I can afford. And ultimately, we got the deal done. So landlords just need to be a little careful. Despite market conditions, the supply and demand imbalance, affordability still really does matter. And I'm going to finish with my most important prediction. Everyone's been waiting for it. Patriots 31, Jaguars 21. Thank you.